What's going on, everybody? It's May 10th, 2023. I wanted to do a review over CPI today. I know there was a lot of large movement um, in the trade that I took and the reasoning behind it. I had some questions behind it. I know ICT was even outlining it, but I had a little bit different view or take on it, I guess, than he did, and a little bit different entry than he did. And I wasn't even really looking at his tweets, but when I looked at his Twitter after and I saw the executions, it was good to see that we were in alignment. So I would advise all you, just FYI, I wouldn't in real time pay attention to his tweets. I really only would find his live streams beneficial and not even really that. Um, I, if you're tape reading, that's perfectly okay to pay attention to his tweets and his live streams or even my live streams, or whatever I'm putting in Telegram. But if you're going for a challenge or live trading, don't pay attention to anybody else. Don't look at anything else. Pay attention to only your analysis, because when you have days like this where it's extremely volatile and prices moving and whipsawing back and forth, you need to be extremely concentrated and you can't have outside opinions weighing on you. That's the reason why I didn't live stream today, because I knew when prices like this, it's extremely difficult for me to navigate, and talking at the same time and trying to think, it's a lot to do. So looking at the daily time frame here, we came down into that bullish fair value gap that we were highlighting throughout the week, and we dipped up into the balanced price range, the red lines there, which we saw a displacement away from. Today was interesting because I wanted to see higher prices overall, which we did get in the later portions of the afternoon, which I didn't trade or even really look at. I got off the charts immediately after I took my trade that I posted in the Telegram. But I want to go down into lower time frames and start kind of dissecting where you could have positioned yourself today, and at least my thoughts. I'm going to try to rememorize basically what I was thinking in the exact moment, because there was so much going on. And I've experienced, plenty of days like this throughout my career here. So if you're new, it's perfectly okay if you got something like today wrong, because it's meant to do that. It's designed. So if you go into the 4-hour time frame prior to CPI, we dipped down into this fair value gap here. Then we saw a displacement higher, which again, you shouldn't feel like you missed something, and you shouldn't feel the urge to jump into the trade, or jump into the market and try to chase something just because it moved. It doesn't mean that you should be trading it. And I know we haven't seen a lot of volatility recently. I mean, maybe last week and the week before, but for the most part, it's been very range bound, very choppy. And now when you see movement, everybody wants to jump into it. And it's designed exactly to do that, to whipsaw back the other way on you. So I think that's really key to note. We dove up into the premium fair value gap here, and we saw a displacement lower after taking out buy side liquidity. In the morning when I post pre-open, I wanted to see us continue higher, to be honest, and I posted that in the Telegram. But I was following my rules, which is basically I'm waiting for the first 15 minutes, 30 minutes of the open to see what price is doing, regardless of a news driver event, regardless of how much we moved. It's my rules, it's discipline, it's following that set of rules that you have out for yourself. So when you have something like that, very volatile, you can get lost with your rules. Diving into the 1-hour time frame, like I said, overnight, we dropped down into this fair value gap here, inversion fair value gap with a confluence, and then we saw the displacement higher rate at CPI, taking out relative equal highs, buy side liquidity above that high there, and then the fair value gap, we saw a displacement away from it. So I'm going to dig into a 5-minute time frame here. So these are the new week opening gaps, and I thought it was absolutely beautiful to see the respect of these levels, of how well they were used in confluence for today. So right off of CPI, we saw this displacement higher right up into, this is the old new week opening gap. So I have a 4 new week opening gap look back on the indicator here. We met that. So right at this new week opening gap is that 1 hour for value gap, 4 hour for value gap, 30-minute, 15-minute. I don't have it annotated, but it's on there, right in that same area. We saw a displacement away from here. Now, in this moment in time, I'm not looking to do anything because I don't know whether or not price is bullish, whether it's bearish. I don't know. And it's perfectly okay to say that. And with experience and time on these charts, you'll either have a feeling, a gut feeling of whether you don't know or whether you're strongly opinionated whether price should move towards a draw on liquidity. And I'll get to that. So in here, some of you may have looked at this and wanted to go short, and you did go short, which is perfectly okay. I just didn't see that at that point in time. I didn't trust anything to go short. The reason being is I was looking at the dollar index and it was dropping, and my overall bias on dollar was going lower. So it was hard for me to want to short this when that was opposing. There was also YM. I noted how it was dropping really heavily, and that's this exact point. I noted that as we started seeing this displacement lower. We dropped all the way down into a deep discount relative from that dealing range low to that dealing range high there. We dropped way down into a deep discount. In here, I also didn't feel as if I wanted to go long because at this point in time, I stated if we were going to go long, and we should have respected this fair value gap in here and displaced higher. And we should have left this as a breakaway gap and continued higher. So that's the way I was viewing the market. And the reason being is because we have two new week opening gaps here. If we were extremely bullish in here, we should have just respected this. Honestly, if anything, just should have IOFED'd it and continued higher from there. So once we broke through that, I'm not as confident in longs. It's not something I wanted to go long in. And then I saw this displacement higher. At this point in time, we were sitting inside of this fair value gap here in this bearish order block. I was looking at NQ. NQ is taking out the higher high. So go back and study that. At that exact point in time, NQ is taking out its high, printing a bearish SMT. YM also made a lower low. So there's bullish SMT on this side and bearish SMT on the other side. That's the reason why I didn't want to go short. In my mind, I was very close to doing it. But I just saw it as 50-50 because I could have seen us easily going higher at that moment in time. It's easy in hindsight to sit here and I should have went short. But all I did was wait for price to displace one way or the other. I don't care if I missed a move. To me, it felt like the safer bet to make was just to wait, which luckily I did. We saw this displacement lower, which in hindsight, it would have been the best entry. But to me, I'm glad that I waited because I was following rules and discipline. If this thing continued to sprint higher, I would have been upset at myself, to be honest, because in my mind, and I was saying out loud, I see this as 50-50. You may not have, but to me, I did. And I saw this displacement lower, breaking underneath these two new week opening gaps, leaving, and I saw it, ICT annotated the 1 minute silver bullet. But to me, that 1 minute was too large of a SIBI. If you go down to the 1 minute time frame here, if you ever have very large SIBIs like this, I'm not expecting an IOFED personally like this. I'm expecting a little bit deeper retracement, and I want more time frames as confluence. So I started looking at the 2 minute, the 3 minute, and I was finding fair value gaps. And when the 5 minute formed, that was for me the signal to go short. And I was comfortable going short off of an IOFED because we had two new week opening gaps with a balanced price range in here. And off the fact that we returned into a premium, rejecting off a bearish fair value gap in here and a bearish order block with NQ printing a bearish divergence. So to me, that felt like the safest bet. And this all goes back to that gut feeling is I had a great gut feeling about this. I was very comfortable taking this. And if you looked at my entry, it was right at that high there. So this took about 15 minutes to displace, and I was looking to target this low here, and then we have a new day opening gap. So if you look at my partial was right at that new day opening gap because I didn't know we were going to go underneath these lows. It's what I was looking for, but to me, I was very comfortable with going for 10 handles and then a 15 handle, sub partial there. And that's all I needed. And you can see we took out the low and then retraced higher. And we ultimately sold off, taking out all the relative weak lows in here. and then we displaced higher, which I'll get into. But days like this can really, really throw you off, and it can induce a lot of emotions because at one point you'll go long, get stopped out, you go short, get stopped out, go long again, you get stopped out. And you're just not being patient enough, in my opinion. You're not letting price prove itself to you. And I think this is all goes back to timing and experience, because when it comes to trading, it's very associated to me around timing and waiting for that right moment. And sometimes you miss it. Sometimes you are not on point. You're not calculated enough. You're not dialed in enough. And I think that has to do a lot with experience, to be honest. So to me, I was just waiting, and I was comfortable not even trading today. I was very comfortable with missing out on the entire day. If I didn't catch this move, I was perfectly comfortable with it. Because to me, it seemed very, very 50-50. Maybe to you it didn't, but to me, it felt like that until we got to basically this point in time where it proved itself to me. And another supporting factor was, if you looked at the 15-minute time frame, we had a 15-minute balanced price range in here. We displaced off of that, leaving a 15-minute bearish order block with the two new week opening gaps. So the more confluences you have to a trade idea, the better the probabilities are going to be. So when I have all these things surrounding my trade idea, it gives me more and more confidence to get into that trade. Doesn't mean I'm going to over leverage. It just means I'm more confident in it. I'm more secure. And you could feel that. Start listening to your gut, start listening to that internal dialogue of yourself when you're trading, and journal those thoughts, record those thoughts and feelings that you're having, because those are indications to you. They're indicators, but you're not listening to yourself. You're not journaling that, so you don't know. This all has to go back to psychology. We could sit here and talk about technicals all day long. Everybody on Twitter is posting PDFs and courses and all this shit on Twitter. But what it really comes down to is psychology. It is all based off of psychology, okay, and experience. So I think the main point and takeaway for me today, if I had to say, what I would recommend is psychology, is making sure that you understand your own emotions, your own psyche, understanding where things go, haywire for you, and knowing your points and processes when you should stop trading or when you should just sit on the sidelines, wait for price to prove itself to you. It's all personal. So days like today, like I said, can ruin you because it's very volatile. It's hard to navigate. In hindsight, it may look absolutely beautiful, which it does. But this is where I disagree with a lot of things on Twitter. And I know I keep mentioning that, but I want to protect a lot of you. I care a lot about my followers and the people that, subscribe to me, because I was once in your position. I was once in your shoes. I understand how it feels. And a lot of people are getting misled out here. And it's very frustrating for me to see that. It's the reason why I'm very transparent. And I'm going to continue to be transparent with you guys all throughout this entire process of getting funded and getting withdrawals. And you're going to see it. I'm very, very confident in it. And I just want to be as transparent as possible because I believe that this space needs it. And a lot of you need to see that if you're new, because you haven't seen people be transparent. You may think they are, but they're not. Okay. So I don't want to go too much on a tangent with that, but just please be aware. A lot of social media, I think there's very, very few in between real traders who actually care about people. And I would like to believe I'm one of them. So if you're here, I appreciate it. Honestly, I believe you're in the right place with the right person. And I don't even put myself on that pedestal. I think ICT above all is the person, if anything, you should just follow and mute everybody else. So there was a lot to today. There was a lot of things that happened. And if anything, just sit out on these type of days. It's perfectly okay to miss something like this. Even for somebody like me who's experienced, it's extremely difficult for me to even navigate. So that's what I would suggest is either if you had a tough time today, just note in the future, if you have CPI or FOMC or NFP, just sit on the sidelines. Don't trade it. Just tape read it. It's the best way you can protect yourself. As far as tomorrow and the days leading up, Thursday and Friday, we have 3 red folders tomorrow morning, 1 hour before the open. So what I would suggest is waiting for that, just like I did today, is waiting for that to play out, waiting for the open to happen, waiting for the first 15 minutes, 30 minutes of the open. See where price is going. It's not going anywhere. It's never going to leave you. Price is always going to be here. These concepts never stop working. So you don't have to be fearful of missing anything. What I would elect to believe for tomorrow is we're going to see higher prices. I don't know for a fact that's going to happen. There's a few things that I'm kind of internally wrestling with is we continuously keep going back to the new week opening gap. So the green one here, we continuously keep gravitating back towards it every single day. And ICT just put out a video explaining this is if price continuously keeps pulling back to the new week opening gap, it's likely suggesting that it's a consolidational type of week, which we're seeing here. So price is really not moving outside of where we started. And that's not a good point or place that you need to be putting risk on. If we start really heavily moving away from this overnight, then, you know, we can expect higher prices, which I would need the dollar to start getting into alignment. It's been very, very range bound and fickle. So it's a very tough environment to be in. Don't let people fool you that this is something that you could be making a bunch of money off of. This is extremely, extremely difficult markets. Been doing this for 5 years and I've never seen this before. So that's why I'd be cautious of. Like I said, if anything, if we move above this new week opening gap and we get above that buy side and we actually see closure and movement and respect to bullish PD arrays, then we can expect this new week opening gap to be met, that buy side liquidity to be met, and then this one at 42.06. But there's a lot of things and factors that need to be taken into account, especially overnight and the morning. So I hope that helped or provided some clarity. I'll update in the morning whether I'm live streaming or not. Like I said, it all depends on the conditions. I'm not going to sit on a live stream and annotate something if I don't feel like it's beneficial to you and if it's not beneficial to me. So without further ado, good luck and good trading, everybody. Be safe.